Good evening and a very warm welcome. Thank you to our honored chief guest for being here as well. And ladies and gentlemen, a very good evening to you and thank you once again for joining us today for CMA Sri Lanka's annual analysis of the budget highlights. Today, as we examine the budget proposals that the government has tabled for the forthcoming year, it is evident how vital decisive action is for our economy. In the face of historic budget deficits from past years, global challenges, and the very personal impact that each of our citizens are feeling as we attempt to make livelihoods, manage businesses, and move beyond mere survival, a cohesive plan is necessary. As management accountants, many of you are at the heart of the financial decision-making process for your businesses, be they small or large. And as Professor Watawala has mentioned on several occasions, you also hold a great responsibility for national interest. Today's seminar will feature expert insights on the holistic impact of the proposals on business, economy, and society, with particular focus on taxation, equipping you with a deeper understanding of how to help you and your organizations navigate the forthcoming year. To set the context, as he accords you a warm welcome, here is the President of CMA Sri Lanka, Professor Lakshman R. Watawala. Professor.
Good evening. Let me welcome our chief guest and keynote speaker, Honourable Ajit Niwad Cabral, the Governor of the Central Bank of Sri Lanka, the Vice President of CMA Sri Lanka, Mr. Hennayaka Bandara, our eminent and distinguished speakers, panelists, and moderator, council members of CMA Sri Lanka, members of CMA Sri Lanka, our invitees, participants, ladies and gentlemen. Let me give you a warm welcome from the Institute of Certified Management Accountants of Sri Lanka, the national professional management accounting body in Sri Lanka, who are organizing this budget webinar 2022. As you all know, first of all, I must thank our governor because I know that he is one person who is in most demand. I think today, I'm sure he must have done about 5 or 6 webinars and seminars addressing on the budget and giving his view. So he is today here with us and I'm very happy that he accepted our invitation to be here. Now, just to speak a few words on the current situation, you know that the COVID-19 pandemic has resulted in many problems for us. And if you see the budget 2022 has been prepared in a situation where we are having a debt burden, we are having a foreign exchange crisis, we are having income and cash flow deficiency, rising cost of living. And I can see that this budget is something of great importance to the accounting profession, both financial and management and costing. I can see that very many things that the Honourable Minister of Finance mentioned in the budget relates to financial management. It was only a week ago that the global accounting profession, consisting of 175 global accounting bodies from 135 countries met, and the main topic was public financial management. So this, I think if you go through very carefully with the budget, the Honourable Finance Minister has explained in detail the great need for the financial management, public financial management, expenditure control. Although very small amounts have been cut, today we all have to go, the government has to go on a very lean diet. We have to make a lot of sacrifices. He has spoken of increasing productivity, efficiency. I think these are very great statements that have been made, which will really revive the economy of this country. Without productivity and efficiency, you cannot do anything. In fact, I do hope that the 30,000 million that was given to the teachers, they will give immediately a pledge to say, we will work till 3 in the afternoon, so that all the old the time period that was lost to be covered by the students. Now, this is how we have to make sacrifices and work in a situation where the country can come out of these problems that we are having. He has spoken on the state enterprises reforms. I think that's a very, very good thing, but everyone is talking, but no one is doing, because I have served 20 years reviving state corporations, making the loss-making corporations profitable, making them productive, making them efficient. But today, I find that in 1984, the highest profit-making institutions was the Ceylon Petroleum Corporation and the Ceylon Electricity Board, because I know that at that time, as the chairman of the People's Bank, I found that they had the biggest deposits and they were putting in our banks. So, but then thereafter, the whole picture has changed. But it has really certain very, very good reasons, because if you just take the electricity board, at that time, the cost of raw materials was zero. They were using water. But thereafter, they used energy, they used fuel. Then you can see how the prices have doubled, trebled, and gone up. But then no one has been analyzing these costs. That's why this management accounting profession was set up in 2009. We set up and was incorporated by Act of Parliament, because the government felt that this is very, very essential. So I think we have to really see that the public sector, now the finance sector, the public sector should not be a burden on the government. He has mentioned that quarterly statements of expenditure approval should be obtained. Now, these are all very, very good things, because without proper management, I don't think that we can go ahead. And I assure you, Honourable Governor, that from our side, we will give you voluntary service. Our people, the professionals, even those from the private sector will come and give the Honourable Minister all support to ensure that this monitoring is done, how the KPIs have to be done, how the corporations can make profits, shed the excess expenditure. I think that's the way that we have to go. Then also another important thing that the Honourable Minister mentioned, the ethical business practices. Now, these are things that we as professionals are practicing. We are teaching our students of good, of ethics, good conduct, how the honesty, integrity, these are all embedded in our professionals. But unfortunately, they are not making use of these professionals. I have a cabinet decision made in 2014 by the then Excellency, the President Mahinda Rajapaksa. What happened? Till 2021, it was not implemented. So today, no government can succeed because even cabinet decisions are not implemented. Here it took seven years. So that's why I say the KPI, the monitoring mechanism, these are very, it's done very well in the private sector. Otherwise, they will not succeed, because if they have no money, if you are a government organization, you go to the treasury, they will give you a letter of guarantee to the bank. So you can get a loan, but in the private sector, you can't get it. You will have to work for it. So I think today, what the Honourable Finance Minister has said is very important, where accountability, they are responsible. All the chairman of these corporations, they must be responsible. If they are not responsible, then what is the point? If they take up the point, the board of directors, they must say, okay, if you are making a loss, you say how you can make it a profit. If you can't do it, then you go home. That's what the private sector is doing. That is what any successful government is doing. So I know today we have a very good professional at the helm of the central bank. He was, of course, in Parliament. I know that if he was there, I would have been making very valuable speeches by this time. But the government has decided that a professional is really required to run this economy and to put someone at the head of it. So not only that, today the Honourable Finance Minister has recognized the professional associations. He has said that they're recognized by government to transfer professional knowledge to new generation by liaising with international professional bodies and bring global knowledge to the motherland. He has allocated 100 million rupees. I must tell that I think the governor already knows this, because when we set up the CMA, I went to in 1999, I went to the then trade minister, late Honourable Kingsley Vikramaratne, and told him, give me a letter, sir, to the Canadian High Commission. I know that I should have not asked money from him, because he would have not been able to give it. And then he said, this is a very good project. We have tied up with the Canadian CMA, and worthwhile. Then I went to the Canadian High Commission. They said, okay, my God, these are very good projects. We are going to develop the talents, the skills of our Sri Lankans. And immediately they gave the money. I went to Canada, we tied up, they gave the knowledge, and we set up CM Sri Lanka. Now see, now this is the same sort of thing which the Honourable Minister has taken. And I'm sure Honourable Governor, your being a professional I feel that has resulted in bringing this into the professionals. We can do many, many things because professionals are people not only with academic qualification, but with the practical experience. I think you know it because we have all gone through this mill and made it a great success. So I think we are there to support the Honourable Finance Minister as financial accountants, management accountants, cost accountants. That if we will give, we don't want to charge anything. We give free of charge everything to make this country, because it is very, very essential. Because you see today our budget heading, if you see, it is talking of taxation, it is talking of business, and of course the society. That is the most important thing. All our accounting is now on sustainability and the service to the society. If you ask any international or professional accountant, they are doing their service to the society. So what I just want to tell is today all our money, although we are talking here, is going to the government ministries. At least once in 3 months, tell us what we have done to the society. What has the society gained? So this is what the Honourable Finance Minister has said. And if that is done, then they will put things into place. I just want to say that if you want to bridge this budget deficit, cut the expenditure by 25%. Cut the expenditure by 25% and tell them you must earn this 25% in order that you will bridge get the money to pay the salaries. Now, this is a very, very simple thing. Then only they will know how difficult it is to make the money, how you can organize yourself. There are very, very prospective. If you take the government hospitals today, those days, the private sector, the private beds that were given to them were given to the people at a very, very reasonable cost, and where the money can come. So I think, Honourable Governor, I just want to tell you that tell them cut by 25%, then they will start working, because in this COVID-19 pandemic, we had nothing, but we had to do this. If not for this COVID-19 pandemic, we would have never got up. So that's the way that we have to go. So let me thank you once again, and also our eminent panelists, our speakers, because they have sacrificed. Now, if you see, we have advertised this, no cost. But I must thank all our speakers and the panelists, because they have sacrificed their valuable time to come and give you all their experience, their exposure, and how this country can go forward. Not that they want anything from the budget. They want to see how they can serve the country, how they can make this country similar or better than Singapore. In 48, we were better than Singapore, but now we can go ahead. So thank you very much, Honourable Governor, for your presence today. And I'm sure that we are there to support you. And if you look for our, we will give you all the support that we need. Of course, everything free of charge. Thank you very much, and all the very best to everyone.
Thank you, Professor, for that overview and the enthusiastic invitation to come together and work with efficiency and accountability for the greater good. Our chief guest this evening is the 16th Governor of the Central Bank of Sri Lanka. He's a chartered accountant by profession, as you know, and has held positions as the president of renowned local and international professional bodies. He's a founder and a fellow member of CMA Sri Lanka, and was recently appointed as a patron of CMA Sri Lanka by the Governing Council. His insights are much sought after, especially at this time, and we are grateful that he has made time for us today to share the perspective and the insights that only he can offer in our keynote address. Honourable Governor of the Central Bank of Sri Lanka, Ajit Niwad Kabral, thank you for being here. The stage, or screen as it were, is yours.
Thank you. Thank you very much for your kind invitation as well as the introduction. I also want to say a warm thank you to my friend, Mr. Lakshman Battawala, with whom I have had a long association, almost for 3 or 4 decades now. And each one of those years has been inspiring, and the way that he has approached the subject of accounting, cost accounting, management accounting, certified accounting, all have been exemplary. And he has been a great ambassador for the profession. And I want to thank Lakshman for his enthusiasm, for his sustained approach in bringing this kind of feeling amongst accountants. And I'm particularly glad that he is now making an effort to bring the accountants and the government together so that we can together move our economy as well as our country forward. So thank you, Lakshman, for that great approach, which I appreciate very much. And I'm also particularly glad that I can associate myself with your effort in so doing. Today, my topic is to give you some insights with regard to the budget. And when I looked at the participants as well as the people who are involved in bringing this message across, I find that many of them have been around when we shared thoughts with regard to the budget already. The last 2-3 days, we have had a large number of exchanges. So, and those have been extremely useful for me too. And I have gained quite significantly from the thoughts that have been already articulated by many of them. I believe my suggestions as well as my thoughts also are known to many of them. So I'll try and see whether I can bring a different dimension to my contribution today. In that sense, I believed that we need to today understand the challenges that budget making poses to any finance minister and the challenges that need to be met in a sustainable manner as we go forward. I think many people look for short-term solutions in the case of many problems that are confronting us. I also realize that the short-term solutions are important. It's not that they are not important. Those are extremely important because we got to meet the situations as it emanates. But at the same time, for any economy to be strong, we need to deal with the underlying issues so that we don't have to revisit those problems all the time. That's why I believe this reform agenda, although sometimes we may not even call it a reform agenda, is important. And those need to be steered carefully as well as in a manner that will not upset the entire framework. And that is a very important consideration that we should all be conscious of. So what are the challenges that Sri Lanka faces? Sri Lanka faces, as Lakshman quite rightly said, a debt issue where there is concerns being expressed that we may not be able to fulfill our debt burden. But I know for a fact that we can. So, but still we have to ensure that the perceptions that are formed out there are dealt with so that people don't carry that as a burden on their minds. We got to deal with the forex shortage, which again, to some extent is reality on the ground, but that is due to certain speculative actions that are being taken. We need to deal with that. We need to deal with the growth of the country, the economy, because we have seen kind of a downturn in the growth over a long period of time, especially from the year 2015 onwards. There has been a downturn in the growth and aggravated by the COVID situation that we faced from 2020 onwards. 2021, we are seeing a recovery, but still for all, we need to have some sustained growth. We also need to ensure that the macro fundamentals become benign, which means we have to deal with the depreciating rupee so that we don't allow the rupee to depreciate unduly, because that can pose an even more serious burden to our economy. At the same time, we need to keep the investment climate to be a strong one, so that investments should flow into the country. People who are within the country must be investing so that the growth momentum can be maintained. Savings have to be, in that case, promoted, because it is through the savings that we will see investment taking shape. Then at the same time, we got to see some infrastructure development, because without infrastructure development, as Lakshman mentioned, you cannot see a transformation in the economy. For that to happen, there must be a consistent improvement in our infrastructure so that people will begin to see better ways of doing business. They will be more comfortable, and we can also ensure that more and more investments will flow in as a result of better infrastructure. Then we need to keep the utilities going. We need to have all the utilities being available, because if you don't see utilities being available in a country, then you will find that many people shy away from those countries that have difficulties about providing utilities, electricity, road network, water, other services, police services, customs. All these must work. And if those are to work, your doing business indicators must be good. You have to have the soft skills being within the country. You have to ensure that there's good education facilities, good health facilities, good disaster management facilities. All these are important considerations within an economy. So the role of the government is to provide these in the context of the country itself. Then there is also a need for the private sector, as well as all the other associations, the professionals, to support that effort. Because then the benefit is not only for the government, the benefit will come to all of them as well. So in this framework, we got to work. We got to ensure that we have the way in which we can handle it in such a way that we can go forward. We are all familiar with the nice Sinhala story about how the Andi Haddana went to the place where they were going to rest for the night. And each one was asked to bring a fistful of grain and put into the pot so that they can make their dinner. But everyone went and showed as if they are putting rice into the pot, but there was no rice. They just put only the fist into the pot and took it out without actually putting the grain in. What happened? All had to have warm water or hot water for dinner because there was nothing in the pot to provide. So each one has to contribute. Each one has to give their might in order to support that effort. Lakshman very nicely articulated by saying they are ready to even provide their skills free of charge. Now that's the attitude that is very refreshing in a country where people need to be supportive of the ventures going forward. In Korea, when there was a crisis, people came with their jewelry and gold to provide for the coffers to be filled once again. In India, the non-resident Indians brought in their funds in order to promote their country's interests. So in Sri Lanka, also we would like to see the Sri Lankans who are abroad, working outside, also contributing to this effort and standing up and being counted as true patriots as well. Leaving that aside, let's see how can we go forward in a crisis which is not of our making. We all know the COVID situation, the COVID pandemic made a huge impact on our country. We saw the country going backwards for a considerable period of time. When I was the governor the last time round, the GDP was $79 billion in 2014. When I came back, or just before I came back, by the end of 2019, the GDP had only risen to just $84 billion. I'm sorry. Thereafter, by the middle of this year, or rather towards September of this year, at the time that I took office back again as the governor, the GDP had come back down to $79 billion. So it is a bit of a quirk of fate that when I get back to the seat as the governor, I find that the GDP of our country over the last 7 years seems to have stood still. But that doesn't mean that we need to get discouraged by that. That means that our country has the potential to grow much faster. So we need to grow once again. It is only if we grow well and grow strong and grow in a sustainable manner that the country can reap the benefits of that. In order to grow, we need to have stability. We need to have stability of our macro fundamentals. Sometimes we may need to take some strong but clear decisions which can be communicated well to the people who are the stakeholders in our society. Everyone has an idea as to which way the economy should move. Just the same way that everyone has an idea as to which way the foreign exchange rate, the rupee, has to move. So, but we have to have some stability. We need to ensure that the proper macro fundamentals are provided so that all can have a stable environment. So that is what the central bank is attempting to do. In many instances, the central bank has had to take clear decisions. We have been guided by other jurisdictions For example, in the recent conversion of foreign currency into rupees, we were guided very, very closely by the Indian model, as well as by the Bangladesh, Thai, and other several countries which have very similar laws and rules applicable. So when we apply those here, I think people must begin to realize that there is a background as well as a basis on which these have been put in place, because the whole purpose of these rules are to ensure that there is clarity as far as transactions are concerned. So we need to bring these changes. We need to bring reforms. We found that some instances, the maximum retail price levels that had been set out had to be removed. And those removals were also sometimes criticized, maybe for good reason, because some people saw it as a way in which the cost of living would have risen. I appreciate that. But at the same time, in order to bring a sustainable economy, we need to do certain things of that nature. We have reduced the taxes for a long time. In the last 2 years, it was much lower than what it was in the past. So at a time of crisis, if we have to reintroduce some of those on a very, very simple scale so that people can understand it easier, I think it's not a bad idea. And sometimes we got to do it in order to ensure that the debt burden does not become even more as time goes on. So these are the considerations on which Sri Lanka had to make certain strong and clear decisions. And we seek the support of the accounting community, particularly the accounting community within the CMA, because if more and more people understand and they appraise their clients accordingly, then the burden of explanation becomes much easier. As Lakshman mentioned, I have been involved in many seminars these last few days because we wanted to convey this position. We want to have as many people as possible appreciating this position as far as budget making is concerned. I have not attempted to go into the specific budget proposals and discuss those. I have also not gone into the specific proposals that were contained in the roadmap of the central bank, because I believe many of you are already familiar with those. But I just wanted to give you the background as well as underlying conditions upon which we have worked and the risks that we have to encounter in so doing. And I believe that many people would appreciate that and start taking their own decisions on that basis. So the stage is set for once again to growth to come back into our country from the next year onwards. This year we will have a 5% growth, but that is on a low base of the year 2020. But 2022 will be a very important year for us. If we can realize growth on a sustainable level and maintain that and maintain the macro fundamentals in a benign fashion, Sri Lanka could go forward with confidence and clarity. So I thank all of you for giving me the opportunity of sharing a few thoughts with you. I'm afraid I may not be able to stay hereafter for this rest of the program, because I know you have a very good set of speakers lined up, but I'm afraid I may not be able to see it live, but I will certainly take a recording of that and see in due course. And I want to thank Lakshman and his team for inviting me, and hope that you will have a very successful webinar today. Thank you very much.
Thank you very much, Governor. I think we deeply appreciate the advice and the comments that you made, because we all know that we have to back you, because if we can back you, the private sector can back you. I think there are leading bankers here. If they can back you, I'm sure that we will be able to overcome all these problems. Maybe we should not only cry, but we should be able to do the work and show the results. I know that you are capable of that, and let me wish you all the very best. And I'm sure that this budget that we are talking of will put us in a new journey, will tell us what the citizens of this country have to do, what the professionals of this country have to do, what the business community in this country, and I'm sure that you will get the support of everyone to back you in these very difficult times to take the country forward. Thank you, and thanks very much.
Thank you, Lakshman. Thank you very much.
Our appreciation to you for outlining the rationale and the thought behind the budget for 2022, the specifics of which we will examine shortly. As mentioned, the Honourable Governor naturally has several pressing commitments this evening, and while we thank him again for his presence and expertise, he will now take leave of us. We continue, though, to look closer at the budget with this evening's proceedings, now with a look into the concepts behind the taxation proposals. So we invite Ms. Priyanka Desabandare, the tax advisor to the Ministry of Finance, to share her expertise.
I think you can hear me.
Yeah, we can hear you.
Yes. First of all, thank you very much for your kind invitation. And I consider this as a national contribution made by a private institution. Therefore, at the very outset, I would like to appreciate and thank for initiating this important awareness and education program on latest tax changes. Today, we are going to analyze the 76th budget of independent Sri Lanka, which was presented to the Parliament by Honourable Finance Minister on 12 November 2021 for the year 2022. A national budget is a document prepared by the government presented its anticipated tax revenues and proposed expenditure for the coming fiscal year. The budget period in Sri Lanka is 12 months, correspondence with the calendar year. Accordingly, national budget explains how the government finds revenue from taxes and non-taxes such as rent, fees, interest, dividends, etc., and spends it on things like national defense, infrastructure, education, etc., and the arts and social programs such as social security and health. Therefore, budgeting is the process of estimating government revenue and expenses during a specific period of time. This is the national budget cycle. I think some of you know about this, but I wanted to share this because I like to share my knowledge with you. So we started the budget from the National Budget Department issuing the national budget call to ministers and departments and provincial councils. That is, starts from the July. After that, we will have several budget discussions with the several stakeholders by the Ministry of Finance. After that, we received cabinet approval for the appropriation bill presented by the Minister of Finance to the Parliament. Mid-November, in this period, we have that in 12th of November. Normally, mid-November, we will have the full budget. It is presented in November, and debate will start on that. After that, it will pass by the Parliament. This is the process of the national budget and the circle of the national budget. After that, we will implement that budget proposals in several enactments. This is the way forward. So first we have the first reading, that is appropriation bill, that is tabled in early October. After that, we will have second reading, that is on full budget, that is a budget speech. Parliamentary debates also have for this purpose. Then after that, we have third reading. In that third reading, we have some committee stage amendments. So finally, the budget will be approved by the Parliament. As all of you know, the government introduced a simple, transparent, and efficient tax system in November 2019 to revive the economy with much confidence. But what was happened? Because of the COVID pandemic, the anticipated expectations were delayed. All of you know about that, not only the Sri Lankan situation, but in all over the world, this situation was happened. And another thing which was happened is tourism income. We drastically declined that, and we lost $5 billion from the tourism earnings. And the next one is foreign direct investments that also not flowed into the country. And the next one is inflow of worker remittances that also declined. Many avenues of earnings revenue locally also not been affected by this pandemic situation. Therefore, we had to implement lot of stimuli and fiscal and monetary stimuli and to revitalize the economic activities covering cash transfers, tax concessions, especially for small and medium enterprises. And we had to give some debt moratoriums and maximum retail prices for essential commodities. As I have explained, 2021 was one of the terrible and disastrous years for the people on this earth. The impact of COVID-19 on a small developing economy like Sri Lanka is greater, and still we are struggling to begin our economic activities under new normalcy. In such a context, we have to handle our economic affairs with extra care. Considering the present context, not like in a normal condition, it is very hard to formulate a budget. Therefore, this budget must carefully attempt to manage government expenditure, in other words, cost cutting. Actually, we considered a lot of expenses to reduce. And the enhance exports significantly, and it must be facilitated in every possible way. We wanted to boost government revenue and increase production in various forms. Therefore, economy savings and investments must be key areas of concerns to revive Sri Lanka. Therefore, our targets have been set like this. We wanted to achieve economic growth of 5% in 2022, and thereafter it should be 6 to 7 %. And we wanted to maintain unemployment rate at less than 5%. In addition to that, we wanted to retain inflation at the range of 4 to 6%. It is a very difficult task. And as all of you know, our tax to GDP ratio is very low. So we wanted to enhance that ratio to 11.2% in 2022 from 8% in 2021. And the next most important thing is reducing the budget deficit by eliminating unnecessary government expenditures. That is the main issue in this budget. And while financing the essential expenditures and privatize state investments. In addition to that, we wanted to ensure the single digital interest rate and to maintain an exchange value of a rupees at a stable level. These are the new budget proposals provided in the budget speech. Our presenter will explain this in detail. I think all of you know that when budget is an estimate, therefore when we are making the estimates, we have some assumptions. These are the assumptions we made when making the budget proposals. We assume that the revenue will increase. The assumptions were based on the actual revenues. Actually, we collected actual revenue we collected up to August 2021, and we considered the economic trends and also the impact of the pandemic of COVID, and tax system and the performance of the economy and the revenue. We consider these things when we are making the budget proposals. The next one is the economy is expected to revive in 2022 because when considering the similar period of 2020 compared to the 2020 first and second quarter, 2021 is a V-shaped economic recovery. That is a very good condition to the country. So we expect to expand the economic growth by 6 to 7%, 5 to 6% in 2022. And as well as the expenditure cutting off, we've also expected to revive the government's exports. Government's extended support provided for the exporters, because those are the people who bring foreign currency to Sri Lanka. So we wanted to encourage them for the diversification and the value addition in the export baskets. So now this is the conclusion. Actually, through this budget, these are the things that we are expecting. The economy should be driven by the innovations. Actually, innovations will drive the the country to the prosperity. Therefore, this is very important. The next one is to establish an economy that provides macro to small and medium scale producers to large scale producers, because we wanted to encourage them to develop their businesses. The next one is uninterrupted access to facilities, because there are a lot of rules and regulations that those are uninterrupted to the to access to the facilities and the other transformation of the economy to advanced manufacturing economy. Therefore, we wanted to transform our economy into the advanced manufacturing economy. Therefore, we wanted to uninterrupt them. We wanted to regulate, facilitate them by losing some regulations. The next one is special. We are going to introduce a special program to encourage the exports to earn foreign exchange. And the most important thing is, as all of you know, the export income and the import expenditure, the gap between the export income and the import expenditure. So we wanted to minimize this gap. Therefore, we wanted to value-added industrial and technological products to export instead of exporting the primary raw materials, because that is very traditional things. Therefore, we wanted to encourage our producers to make value additional industrials and technological products. In addition to that, we wanted to import substitution. We wanted to create very strong import substitution industries. Then that will save the foreign currency outflow from Sri Lanka. We can do that through the manufacturing of organic fertilizer, renewable energy, and the production of milk, sugar, and medicines, because those are the items that we use a lot of foreign currency outflows. Therefore, we wanted to create strong import substitution industries. And the next thing that I have already explained is we have to move away from the regressive policies and embark on a rapid economic development which fulfills the aspirations of the entire population, because that regressive policies are very badly affect to the businessmen to enhance their businesses. Therefore, we wanted to move away from the regressive policies. The last one is, in order to reduce the budget deficit, we need to measure for solid expenditure management, because we wanted to minimize the expenses and increase government revenue and restructuring loss-making public enterprises. So these are the things that we expect from this budget. And finally, we believe that after the implementation of these budget proposals, we can move our country to the prosperity. But that prosperity will not come only announced in the budget. It will come if we work. Therefore, I request all the stakeholders to consider this, because we have to work together to become a prosperous, to obtain a prosperity to the country. So thank you very much.
Thank you, Ms. Disabandara. We've gained an understanding now of the why behind the taxation proposals. To take a deep dive into the how and its implications, we welcome the Partner for Tax Practice of Ernst & Young, Mr. Nista Suleiman. Mr. Suleiman, please.
Good evening, ladies and gentlemen, and welcome to this budget presentation by CMA. Let me just share my screen. Can you see the screen, Professor?
Yeah, we can see. Fine. We can hear you and see.
Okay. So firstly, I'd like to thank Professor Butterwell and CMA for inviting me to do this presentation. On the budget review 2020, it's a sort of short synopsis of now, next, and beyond as to what the budget has to offer primarily from a business and tax perspective. Yeah, so a quick summary of the macroeconomic vision that was presented by the Honourable Finance Minister. The key points were to strengthen the balance of payments, improve public finance and national budget, reforms in banking and financial activities, human resource development, and environmental conservation. The key measures and targets that were highlighted, and it's good to have these long-term targets so that we can work towards it. Increase foreign reserves to 10 billion USD by 2027. To increase export of goods to 19 billion by 2022. So it's currently, the target is 16 billion, I believe, for this year. Trade deficit to be maintained at 7 billion in 2022. The external current account to have a surplus of 6 billion in 2027, and foreign debts to be reduced from 36.5% of GDP to 13.6% of GDP by 2027. So these are some of the goals that have been set out in the budget. The summary of the numbers, I think all of you are probably familiar with it by now. So the two columns, we have an estimate that is what we are going to achieve by end of 2021. And then, of course, that the budget is going to help us achieve a total revenue, an increase from 1.5 trillion to 2.2 trillion, and a tax revenue increase, which is also quite significant, from 1.5 trillion to 2.2 trillion, and a total revenue to GDP, which is 9.4% or expected to be 9.4% this year to 12.3% next year is what the budget proposes to achieve. So one of the key and significant tax proposals is this one-time taxes that have been introduced by the budget. So keeping to the commitment made, I think, in 2019, that the policy for taxation is not going to be changed like what we've been used to in the past, where so many with the volume of changes, although they may not be too significant, from withholding taxes to changes in rates to changes in capital allowance rates, none of that. So absolutely no policy level significant amendments to the Inland Revenue Act or the VAT Act have been proposed. However, while there is a reduction in volume, there is, of course, an increase in significant impact from both the revenue generating perspective as well as a cost perspective for businesses by the introduction of these new taxes, three of them. The first one being the tax surcharge is proposed to be implemented. The qualifying persons are both individuals as well as companies with a taxable income of over 2 billion rupees. So that is the criteria, right? Applicable for the year that has just ended, 2021, that's March 31st, 2021, for which we are about to file a return by the end of this month. That is the year that they want to capture. A very significant rate of 25%, and it is expected to generate 100 billion rupees. So the significance of this is the large quantum, and it will only affect in terms of tax payment very few of the largest companies who have the capacity to pay, is, I presume, the assumption. So there are a few possible implications and insights as a result of this tax, which I'll just run you through. And the first is, of course, whilst the tax base is taxable income, or it appears to be, and that has been confirmed to some extent by the ministry, the question is, taxable income has a specific definition, and if you don't have taxable income, but you are making significant profits, are you required to pay? So, for example, certain exemptions have been given to IT companies, you have BOI companies that don't pay tax. So are they also required to register for this payment is a question that did come up. and also with the experience of super gains tax, whether this will have an impact on groups. You see, so for example, if you have one company earning a taxable income of 2 billion, and you have 4 companies having 1 billion each with one owner, the one is going to pay this tax surcharge, whilst the other with 4 companies is not. Whilst the investment and so forth is the same. So that came up in super gains tax. Whether it will be brought into this law, we need to wait and see. Another issue we see is the marginal relief, which is generally granted where criteria to qualify is equal or very close to the threshold. So for example, someone who does make 1.9 billion will not have to pay the tax, whilst the person who makes 2.01 billion is going to have to pay the whole tax. So the question there is, should he pay the whole 25%, or does he get marginal relief where you have a system where it's phased out until you meet the 25% that you are allowed to get some relief, is something that should be looked at in order to give some sort of comfort to those who are on the borderline. The other issue that does arise from this is the large groups where you have operating company having 2 billion, and then that is distributed as a dividend to the holding company, which would again, now that dividends is part of taxable income of most companies, there is taxable income again at the holding company level. As a result of that, there is likely to be a double taxation, which should probably be eliminated. And whether this would be deductible for income tax or any other tax, primarily income tax for the next year, because it's going to be an outgoing, and whether this would come as a separate law or whether it will be part of the Inland Revenue Act, in which case there is already a process for appeal, refunds, and so forth. So these are some, I think, pertinent areas that need discussion with the policymaker prior to it being finalized. The other one-off tax that was introduced was the financial VAT, which banks and financial institutions pay at 15% currently. That is proposed to be increased to 18%, so an increase of 3% on the value addition calculated for banks. It's supposed to be only for January to December, payable monthly, and to raise 14 billion rupees. Here again, the issue does arise if, and most banks would pay the surcharge tax that we just discussed above. As a result, it depends on where you probably account for the surcharge tax, and that will depend again on how the bill comes. If it does come if the surcharge, the tax surcharge hits above profit before tax, then that's going to reduce your PBT, which is the starting point for a VAT-FS calculation. So if that does hit, then your VAT-FS base is going to significantly come down, resulting in a lower VAT-FS payout during this period. However, considering the tax surcharge and the VAT-FS looked at cumulatively, it is likely to have a significant impact on banks and financial services. If for some reason the law is drafted in a way that it is considered, tax surcharge is considered to be income tax, then it will not hit PBT, it will go below the line, and as a result, your VAT-FS base would not be eroded. Another provision that has been introduced, so only two provisions for VAT. It is basically an exemption, I think, in line with the current COVID pandemic, where they are providing an exemption for anyone who donates any of these items that you see here on the left side, medical equipment, machinery, apparatus, hospital furniture, etc., to a government hospital or the Ministry of Health. And if appropriate approvals are obtained from the Ministry of Health after January 1st, 2022, in relation to a public health emergency or any pandemic. Right, so since we're talking about that, we've done a small analysis of what the VAT rates worldwide look, we've taken a sample of Europe and America, and you have Asia Pacific on your right. So as you can see, the rates in the European area is much higher, at ranging from 19 to 25%. And we've analyzed the movement, how much it has changed from last year to this year. And you can see there are no changes at all in any of the countries that have been selected. And Sri Lanka, being on the low side at 8%, also has not had any change from last year to this year. Another new introduction, a new tax. So now the existing taxes have not been touched, but these new taxes have come in obviously to raise revenue, which is a dire need at the moment. There's introduction. It looks like a turnover tax, although it's called a social security contribution. But it has saved the small sector. So anyone below 120 million per annum will not get charged with this. It is medium and large who appear to be the target. Applicable from April 1st next year, and at 2.5% of turnover, hoping to raise 140 billion. So the tax issues that could come about from this is that it appears to be applicable for all, and whether you're in banking, manufacturing, services, export, exempt, it appears that all will be covered. However, as we have seen with NBT, there's likely to be certain exemptions coming in, probably for foreign income, exports. So those are, will have to yet to be seen. But 2.5% is quite significant, especially if there is no input. There's going to be a cascading effect from manufacturer 2.5% to wholesaler 2.5% to retailer 2.5%. There's going to be a cascading effect that will ultimately hit price. So things like tourism, exports, IT, whether it's going to be impacted, we need to wait and see. Also, whether it will affect areas like dividend and interest, also whether it will, for holding companies, if it falls part of their liable turnover, whether it will be liable is a question. And also, it does not make reference at the moment whether you can collect it like VAT or whether it will be charged to you is the other question that comes about. The next introduction, this was the special goods and services tax. It was introduced in the last budget, and they're going to implement it. We understand that the bill is out, the bill is being prepared or is almost ready, and it is to be implemented from January 2022. So the purpose of this was to introduce an online managed composite tax, because some industries have so many different types of taxes, from VAT to excise and so forth. And the intention of the government is to relieve these regulatory bodies who are collecting various taxes and allow them to do regulation, and for one authority to collect the tax. So the scope as per 2021 budget was to target alcohol, cigarettes, telecommunication, betting and gaming, and motor vehicles is what was introduced. So here again, there are certain ambiguities. Who will regulate? Who will be the regulator? Will it be the Minister of Finance, which was mentioned somewhere, or will it be the Commissioner General of Inland Revenue? Whether it will cover any goods or the same goods that were introduced in the last budget. Will there be a single rate for all these industries, because they are all taxed at different rates? We understand from the Treasury Secretary that it will be different rates for each industry. Also, whether it will be inclusive of VAT, whether VAT will be exempt and this be liable, in which case the VAT input is going to be accumulated and will be a cost. Plus, when special goods and services are charged, for example, if you have a telco who charges special goods and services to a business, the business can't claim special goods and services. Plus, the telco, since they're exempt from VAT, will not be able to claim VAT. So there is a double hit on the input, is what it appears. So whether these will be ironed out to avoid a huge cascading effect is something that we'll have to wait and see. So these are the areas targeted. Currently, all except vehicles is liable to VAT at 8%, as you can see on the top line. And then each of these have an excise duty. If your cigarettes has excise, telecommunication has a telecommunication levy and a cess. Betting and gaming also has annual levy. Motor vehicles have this excise duty and a luxury tax. So all of this is going to have one single special goods and services tax rate is the understanding at the moment. In addition to those, there are levies and licenses which are going to raise 25 billion rupees. So in the leisure sector, there is a proposal to develop special zones for which licenses will be issued. There is no understanding at the moment on what the rates will be and what sort of fees this will entail and what sort of area it will entail. Similarly, telecommunications, they want to auction for fixed phone operating, mobile phone operation, internet services, and satellite. So this, I think we understand it is for those that are expiring. There'll be an auction system to sort of auction these out again. And particularly the 5G frequencies, we understand are to be auctioned, affecting the telecommunication industry. In addition to that, there are 3 new fees and penalties that have been imposed for motor vehicles. One is for the in respect of vehicles meeting with accidents. So this is, I think, going to be charged out of the insurance, or insurance companies will have to pay this out. It is to encourage people to be more responsible when driving and not meet with accidents. Also, there's a proposal to levy for modernization or upgrading of vehicles. This is already covered in the Motor Traffic Act, where there is a penalty for any upgrade. So whether those will be combined is something that is not clear at the moment. Authorization of illegal vehicles. It appears that there are several illegal vehicles that they want to authorize after paying the penalty, a particular penalty during an amnesty period. And also for customs, where they have seized vehicles to release them after a payment of a tax. So these are all sort of revenue measures that they're trying, non-tax revenue measures the government is trying to achieve. On the tax administration side, there's a strengthening of the large taxpayers unit, where they want to collect 80%, or they do collect 80% out of 20%. So there can be, you can expect a higher degree of audits taking place with this initiative. They want to also address the deficiencies in the remis system, which has been long overdue, and I think that is something that they will also implement and connect to other agencies. A further single window system for customs, strengthening of the tax administration of excise, and streamlining liquor licenses. So this is on the administration. They're trying to sort of streamline it, examining the accuracy of tax documents. Digital tax filing and digital documents are to be allowed. Strengthening efficiency of online payments. It was facilitated during COVID, but they are going to do a payment platform with Lanka Clear, which will make it a more robust system, which is extremely necessary in this day and age. Application of technology for tax to make sure tax evaders are caught. So to utilize technology to reduce tax evasion is another proposal, and also revision of HS codes to streamline, as well as to bring in advanced technology used in other countries as well. Other reforms, public sector retirement age to be increased to 65, foreign direct investment conditions to be relaxed, foreign currency conversion and transfers to be relaxed for exporters through a special finance bill, and agriculture sector to be enhanced. So that's about the proposals. We have just done a quick analysis of corporate income tax rates. As you can see, Europe and America on your left, and Asia Pacific, and the movement. So not much has moved. Most have reduced their rates. Whoever has reduced have reduced it. Sri Lanka is stable at 24. On the personal income tax rates, the higher European countries are very much higher. We've seen slight increases. Sri Lanka at one of the lowest at 18% for individuals on personal tax. And on capital gains tax, again, mostly stable globally, and Sri Lanka at 10% without a change. So that's it from me for now. We can take any questions during the Q&A.
Thank you, Mr. Nishta, for that detailed analysis and for raising aspects for future consideration too. We see that several of you in our audience have shared questions that you would like addressed, and there's a panel discussion ahead, as was mentioned, where as many questions as possible will be taken up, time permitting. So please continue to use the Q&A function to share what you would like to know. Now, it was mentioned earlier that the inflow of funds from outside of the country has been limited over the past years, creating challenges in reducing the deficit. We take a look now at the impact of budget proposals on the export sector. And to share with us his expertise, we have Mr. Hasitha Premaratne, the Group Chief Financial Officer of Brandix Limited. Mr. Premaratne? You may need to unmute as well.
Yeah, I think all of you can hear me. Good evening, everybody, and thanks for inviting me to make this presentation, Professor Patawala. I will look at briefly the business impact of Budget 2020. Of course, much has been told about the budget so far, and a lot of details have been spoken about, so I won't take too much time to elaborate by proposal, but I'll take a few taps on important areas where I'll touch on the budget overall in a nutshell. How does it look like? And leading up to the budget, the corporates, businesses had multiple issues, and some of them are absolutely burning issues. So how some of those burning issues look like, and then the business impact of the budget, and then of course impact of some of the key tax changes, particularly the two taxes that are being spoken about in all forums. So first of all, I think if you look at it in a nutshell, there aren't too many changes in terms of the policy framework, and that in fact, in my opinion, is a positive thing, because the policies stay consistent, and compared to previous years, there are too much volatility in the budget overall. There is quite a bit spoken about entrepreneur and SME focus relief, particularly during the COVID time. These are the two segments of the economy that went through significant negative impact. So there is a whole heap of expense proposals that have been spoken about to maybe not necessarily to grow, but at least to ensure, first of all, that these smaller segments survive, and then regain momentum to get back as the economy gradually picks up post-COVID in the post-COVID environment. The two new taxes spoken about by many and believed to be one-off. The main one, of course, is a surcharge tax of 25%, which has been very clearly stated that it's a one-off tax. But that said, I think the second tax, which looks to be a replacement of NPT in a different term on one hand, but on the other hand, I think we heard the Treasury Secretary saying in a previous forum that the idea is not to continue that for too long and probably bridge the short-term gap and then relax it as things progress, which means that both of them will be mostly short-term taxes, let's put it that way. And then, of course, when you look at it from large corporate side, these taxes are definitely impacting, particularly the ones who have had 2 billion or more profits last year, and then 120 million and more of revenue for the 2.5% social contribution to be impacted. So that's not a big amount, 120 million rupees when you take from a corporate side. Rural development related allocations are quite significant, and public sector expenditure reduction is spoken about, which is a good initiative. Like Professor said before, I think there's a lot everybody has to commit if we have to make this work. And then public investment the government investment side is proposed to be increased by 60% to something like rupees 982 billion, which is a positive thing in my opinion. But that again, I think the point to note is that if we don't collect the revenue on time, if you tend to sort of have a revenue shortfall, these are the area that probably get cut first, and you tend to continue the recurrent expenditure, but the public investment is something that you tend to pull down. So while you start with this type of a number, actually the reality might be different if the collections don't happen as planned. So these are a few highlights that I wanted to bring about. And of course, the tax administration has been spoken about in length. Only thing I have a little disappointment there is the allocation of funds. When you look at the public sector digital side, I found only 500 million rupees of allocation, while of course talking about Remis and BOI system and all the custom systems being already in play, bringing them together to talk to each other is a very important thing from a digital economy perspective, particularly the digital invoice and the other areas that have been spoken about. But investment perspective, I didn't see too much allocated there, which probably need to be clarified further. So the lead up to the budget, I think we all came out in the last 18 months with a very challenging environment due to the COVID-19, and still the volatility continues, possibilities of further lockdowns, etc., not completely off the guard. So we are heading to this period with continued volatility, which in the last few months have resulted in retail and consumption slowdown, and in particular the global commodity prices, which nothing to do with Sri Lanka, but of course all over the world, this is an impact which is leading to high inflationary conditions in the countries globally, be it oil, be it food, be it cotton. All the key commodities are increasing in price, and it has been doing so for the last almost 12 months. And that's a huge concern from a business perspective. And then of course that results in a increase in the cost of living, which we are seeing, we are experiencing, and of course the shortfall of goods and even essential goods in the country, and also the forex challenges, which absolutely has been a concern in the last few months or so. And then all these lead up to a challenging investment climate, which from an investment perspective, from a corporates, for growth, you need to take those decisions to make your investments. But of course, circumstances always tend to keep you on a wait and see approach, which naturally, there's a natural tendency, but I think breaking that shackle and how you move forward is a very important aspect from a corporate angle when you look at this. So then if I may move to the budgets and the corporate, particularly touch on the export side as well as a bit on the overall picture. So what do we really look at from a corporate perspective? A positive business climate led by new business opportunities, infrastructure and connectivity, tax breaks or incentives or encouragements, people development, funding, and then of course stable policy framework. So this is something that we expect from the budget as businesses, and in the context of this budget, I think it's not really fair to look for any tax breaks, given where the government budget is and the government financials look like. But that said, I think from a longer term perspective, policy related incentives are something that need to be looked at on a continuous basis. So from an export and the market development perspective, there aren't too much spoken about. Exports have been mentioned many a times in the budget speech, but specific initiatives have not been outlined in detail to cover. But one of the areas that have been spoken about is the export market and product expansion, diversification. So here the critical part will be, I think, looking at the free trade agreements, because as exporters, be it the existing line of exports like apparel or rubber, tea, all of that are going away from the traditional exports and looking at the new world of exports with IT, pharma, and any other potential areas to be looked at as new diversifications in the export regime. I think one of the key things that we need to highlight is the need of the trade agreements, because our competitive countries have access to these markets in Europe, markets in China, India, Japan, etc., and even UK now being after post-Brexit being a different location altogether. we will need this aspect to be looked at. So I think the budget doesn't specifically mention, but there is some allocation of funds. I'm sure more than money, there is the will and the drive that is needed to get this market access, particularly duty-free access to some of these key markets around us. Moving from there, the other big proposal that relates to the industry, particularly the export-related industries, to say, as I think previous speakers also spoke about, the raw material to be produced in the country and expand the vertical integration, which in certain industries like apparel, we have done relatively well, but in other industries, some other industries, there is more work to do there. But even in apparel industry per se, there is more to do. So I think there's about 5 billion rupees allocated in establishing some of the new industrial zones. But I think it's also equally important. I think it's absolutely important to expand some of the existing industrial zones like Sitavaka, Biyagama zones, which requires the water treatment and effluent discharge capacity to be enhanced very urgently. Today in the global, at least in the apparel industry, there is a big drive towards moving fabric and raw material to be regionalized or localized in the country of manufacturing the product. So in that context, we have more room to bring. But unfortunately, all the fabric mills are full, but there is no room to expand, mainly the bottleneck being the water. So I think I'm told that the quotations have been called by the BOI, and BOI is taking this as a priority. I hope that some part of that 5 billion will be allocated as a priority to fund these existing zones to be expanded, because at the end of the day, what matters is what's in your hand. You need to go next year and year after, and any new zone to come in Irapur, it will take 3 to 4 years to really reap the benefits out of it, which is important from a longer term perspective, but not to forget the short term implications and the needs, because the short term getting out of this current situation is absolutely crucial. So that's something that need to be, I hope, will be covered in the post initiatives that will come in. And from a other angle is that the entrepreneurship as the SME, as I said before, so there's a lot of relief being allocated for small businesses, about nearly 5 billion and additional, and there's something to the effect of small business focus with home shop, home economy concept, which kind of attempts to look at the smaller within villages, smaller kind of factory environments to be established in small capacities. So these are good concepts, but need a lot of thinking to make it work in a sustainable manner, because as an industry, we look at scale to give the economies of scale. So you go against the principle of economies of scale and looking at the smaller village-based manufacturing. There has to be the value proposition and that competitiveness being looked at as a criteria before you allocate funds, because surely otherwise these funds will end up in a waste. So the framework has to be put in place before that's been taken to the next level. The consumption side, again, we have seen in the broader economy, the consumption dropping, inflation rising. So I think the consumption pickup is needed. And some of these funds that are being infused towards rural development, a big money for about 62 billion rupees across these two initiatives alone, but there are more initiatives around, and also public sector salary adjustments that have been taken in. On one side, these are burdens to the government, but on the other side, it also, in a positive angle, when you look at it, it also injects capital or in this cash into the system, which leads to consumption and then supports growth. So it's important that there is a balance between the two, while you bridge the fiscal deficit on one side in a manageable manner. On the other side, it's also equally important to look at the consumption drive and pumping in cash into the economy as well. So infrastructure perspective, I think as businesses, we are very keen to look at the infrastructure bottlenecks to be addressed today. I think the whole of the exporting and the import industry are going through a nightmare with the logistics bottlenecks that are happening across the world. Be it China, be it India, be it US, be it Europe, everywhere these logistics bottlenecks are coming in, where the shipping days are getting delayed on one side, and on the other side, the rates are almost 5 to 10 times higher than what it was pre-COVID. So I think this is during these unprecedented times of logistics bottlenecks. I think addressing some of those with our port network, the airports, and the expansions and allocations of money there is good, including the road network expansions, which will help obviously to look at businesses to grow beyond the boundaries. And from a tax changes, I'm coming to the last couple of points in my presentation, and look at some of those initiatives in the budget, how they impact the business. But a lot is spoken about the two main tax changes. But before I go there, I think in 2019, the government, when they came into power, it was mentioned that a low tax rate regime will continue. And from a policy perspective, yes, it has been continued rather than increasing the tax rates. Tax rates have been kept consistent. And then obviously, when you have a low tax rate regime, you need to have volume and economic activity to come up in order to compensate the low tax rate, so that you have an increase in the overall tax revenue. But unfortunately, with COVID, that really didn't happen. So that's something that brings concern from government perspective, and obviously to cover that, bringing in these one-off taxes again. The 25 surcharge is obviously, it's a one-off thing. It's been said and made it clear. But 2.5% social security contribution is not necessarily told as a one-off, but I think the Treasury Secretary indicated that that's something that probably will be eased off as other revenues start coming in, tax revenues start coming in. But I think the challenge here will be really when you bring these surcharges on top of the already paid corporate tax, and also to the last financial year, which is closed in accounts now, when you say that, okay, open and then pay tax out of that, there are many challenges that come in. Apart from the cash flow challenges, also the investor confidence part of it. So that's something that need to be understood and look at. Of course, as I said before, circumstances have been quite challenging from a government perspective. So without changing the policy on the low tax rate regime, looking at a one-off tax, I think can be explained to the investor in the short term. But the bigger challenge, or the important thing, is 2023, because 23 is only 15 months away, and economic activity has to significantly pick up for the government to achieve those tax revenues that have been projected for 2023 and beyond, with this low tax rate regime, if it is to continue. So if you're talking about continuation of the low tax rate regime, then you need a significant boost in the economic activity to achieve the targets beyond 22 that has been spelled out in the medium-term framework. And for that to come, I think obviously a lot has to happen, and looks little bit optimistic in my opinion there. So my worry there is that if the next year shortfall is bridged by this one-off surcharge tax, if following year there is a gap, what are you going to do? Are you going to bring another one-off? Because another one-off will be a real disaster from investor confidence point of view. So I think it's important that that angle is being looked at, and so policy direction is being understood, because obviously this 25% surcharge tax one time under the circumstances, I think it's explainable. But beyond that, I think it has to be very well looked at, because another one-off is something that we will find very difficult to manage with the investors and keeping that investor confidence going. So the 2.5% social security contribution look to be more of the similar terms of the NBT. I don't know what are the specifics that will come, which industries will be, whether there's any exemptions at this stage. I think the Treasury Secretary's view was that there should not be too many exemptions. If so, the objective will be lost. So there might be very few exemptions, if at all, in this context. But broadly, I think the principles of turnover taxes need to be looked at in the context of the type of industry, competitiveness, global competitiveness, etc. So I believe that angle will be looked at before the detailed legislation come out. So overall, I think to summarize and conclude, from a business perspective, these are real challenging times for not only the businesses, but also to the government. So that's understood. So challenges will remain for at least the next 1 year. As I said, most of those things are continuing, including the COVID impact, the commodity rises, price rise increases, etc. But in that context, I think if you look at it in a nutshell, there is big negative impact on the large corporates who have to pull out their last year profits and pay taxes, including the banks. I think Jonathan is there. He'll elaborate further on that later on. Infrastructure and rural development focus is good. As I said before, there is money allocated. Again, spending will improve consumption, but government will have to be putting that money at the right places, which can give a return in the short term as well, not just looking at long-term return only, because it's times of short-term recovery that is more important at this stage than thinking long-term. I'm not saying at any means not to think long-term, but balancing that is very, very important. So focus on survival of the SME and the entrepreneurs is a good thing, because that's a backbone ultimately of the economy that will come through. So there's reliefs that have been given need to be channeled to the right places, and they should be made use for the right purpose and the right cause, so that it won't go waste. And in the meantime, as every budget, we need to keep an eye how the execution happens, because most of the times we have a great budget, great proposal in paper, but when you go to execute, we had so many differences, challenges, and as a result, shortfall in revenues, etc., which leads to many more problems. So I think executing this will be key. But overall, in my opinion, this is a budget which attempts to set the base during very, very challenging times. And during these type of conditions, I think collaborating and working together with the government and the private sector is absolutely important. But that said, even the government should understand some of the pains that the private sector go through, and vice versa. And if that channel is looked at before these detailed legislations are done, I'm sure some of these negative impacts that are seen can be managed much better to ensure that there is better consistency and better policy framework. So with that, I would like to conclude my presentation, and later on, I think there will be more questions in panel discussions. Thank you very much, everybody, and all the best.
We appreciate the comprehensiveness of your presentation, Mr. Premaratne. That consideration of the manifold effects of the proposals and some of the questions you broached along the way rather aptly leads us into an examination of their economic and social implications. And to shed light on that area, we are happy to have with us Dr. Dushi Veerakon, Executive Director and Head of Macroeconomic Policy Research at the Institute of Policy Studies. Dr. Veerakon, if you will.
Thank you very much. I'm going to keep my comments fairly brief. I think there's been an exhaustive analysis of the budget over the last few days. And all the audiences are sort of well-versed with the nitty-gritties of what's contained in them and the implications. So I've been listening to the three previous presentations and listening to the take on the tax proposals that have been presented. But my stance, looking at the budget overall from an economic perspective, is I see the budget in some sense as a stopgap budget for the year, rather than a budget that sort of leads into a 3-year framework that sets out how revenues will continue to be raised and financing needs met over time. And just taking a quick look at the overall revenue growth that is being projected for 2022, I think it is a bit on the optimistic side. There's a revenue increase of nearly 46%. And the sense I get is that the government seems to be hedging its bets that economic growth will create revenues. Now, if we look back at Sri Lanka's experience over time, I mean, we had a period in which in the immediate post-war years, GDP growth was fairly high, but we didn't see an increase in revenue pickup. In fact, the revenue to GDP ratio kept declining. So whether economic growth translates into revenue buoyancy depends on many factors, one of which is whether the growth is broad-based and spread across the economy. For instance, if it tends to be very narrowly focused on, say, construction and mixed development projects, for instance, where companies and firms involved may have been granted significant tax relief, then the revenue pickup by the government tends to be much less. So we have to be, I think, watchful that the fiscal estimates do sort of live up to expectations, because Sri Lanka's policy space to maneuver is very limited. And if there is continued stress on the revenue side, which that means that the government has to continue to try and raise resources through other means, and that would mean through additional borrowing. Now, a second related point on the overall sort of macro fundamentals underlying the budget estimates is that whether those revenue and expenditure and deficit targets would support a growth trajectory over time. And for instance, the governor also explained that it's critical to keep the growth momentum going into 2022. The recovery or the rebound in 2021 is not surprising. It's happening all over the world because you're bouncing back from a contraction and a low base. But the more difficult part is once you have returned to pre-pandemic output levels, to keep growing at 4 or 5% thereafter. And Sri Lanka's growth target of 5% in that context is again quite sort of a high target that we've set for ourselves. Now, can we get to 5% growth next year? Two concerns. One is the inflationary pressure that's sort of, it's visible now. And in the months to come, I think the inflationary pressures will strengthen because there are supply disruptions. Some of it is related to the domestic economy. There is also the fact that the heavy injection of liquidity into the economy to deal with the COVID-19, all of that will start to work its way through the economy in the coming months. Monetary policy always works with a lag. Then we have the threat of imported inflation. When the rupee current restrictions or the on the rupee is lifted, at some point it has to be lifted, then the depreciation of the currency will generate some degree of imported inflationary pressures. And on the external front, international gas and oil prices are heading up. And that means if Sri Lanka doesn't have the space to subsidize and absorb all of those prices, some of it will have to be passed on to consumers. And that again means economy-wide price pressures will begin to work. So on top of these inflationary pressures that are building, the fiscal numbers for 2022 suggest that the government will also be increasing its reliance on bank borrowing next year, even compared to the number in 2021 to about 2.7% of GDP. In that, there is some estimates of raising some funds through divestiture, etc. But those may materialize, those may not. So on the assumption that bank borrowing by the government is going to continue, it is in some sense calling for the central bank to step in with higher interest rates, which will threaten the growth outlook, weaken revenues, and leave less room for private investment. The public investment target that's been set is about 5% of GDP, but in 2021, and Sri Lanka has this creative budgeting procedures where we overestimate public spending, and so that some room is left to adjust when the end year fiscal deficit have to be refined. So last year we had a public expenditure target of 6% of GDP, and we ended up with 3.5%. that is the latest estimate. So similarly, a 5% public investment target is unlikely to be met, which means again a weakening of investment to drive growth. So, you know, for all intents and purposes, we have to push for growth of at least 5%, but getting there might not be as easy as we think. And if we don't get there, then the revenue expected revenues will also weaken. The other related macro indicator that in some sense has a bearing on the budget is the exchange rate. Now, ideally, in the current set of circumstances, the 2022 budget should be one that leads into a 3-year policy framework that offers a comprehensive analysis or policy commitments of how we are going to tackle the fiscal stresses as well as the overall high debt to GDP levels that we have. So in some sense, I think we haven't done that, which means it will be a little more difficult for Sri Lanka to convince its the credit rating agencies, etc., to take another look at our sovereign ratings and firm them up and ease our way back into international capital markets, because that access to capital to roll over our debt is critical, and that requires essentially the first step is that we have to generate confidence on the fiscal policy front. So I feel in some sense that we missed that opportunity with this budget that has taken a sort of a 12-month view on what needs to be done to relieve the immediate fiscal pressures that the government is facing. And related to that, I think what was mentioned by the previous speaker also, the budget does make reference to the need for Sri Lanka to up its exports in goods, in services, etc., but there are no concrete proposals to how we intend to push exports up, and what are the targeted incentives that may be provided in order to do that. So again, I think some additional focus on how we will generate foreign exchange earnings would have helped. Now, my last 2 points, I just want to touch on the social implication side of the budget. I think it is a bit concerning to note that while subsidies and transfers, which includes subsidies to and transfers to households, has actually been it's much the targeted figure for next year is much less. Whereas when we look at salaries to public sector, and that is set to expand by 14.5%. And that's twice the rate at which overall current spending is increasing. So there is 45% of whatever taxes that the government expects to raise will be going towards the payment of salaries of public sector service, public sector workers at the central as well as at the provincial council level. Now, can Sri Lanka afford this at a time when we are talking about the need to trim expenditures and lay sort of a foundation for medium-term fiscal consolidation? I think it is concerning because, again, the budget has proposals to provide permanent jobs to 50,000 or so graduate trainees that it had taken. So there is no attrition in the public sector, and with the raising of the public sector retirement age, these costs will continue to expand, and this is the one area of discretionary spending, where significant headway can be made if we are to seriously tackle our expenditure side, but at the same time ensure that there is more equitable allocation of fiscal resources towards those who most need it. Even some of the research that we've done at the IPS through the COVID-19 shows that it is the 60% of our labor force who are informal sector workers, those on daily wages, those without social security, have been the ones who have borne the brunt of the fallout, and as well as workers in the private sector as well who've had to take a wage cut. So I think some of these considerations have to be built in when budgets are being formulated, particularly in such tight economic conditions. The last concluding point is that, I think we have to recognize that the budget has been prepared under very trying circumstances, and the priority is to put growth, employment, and incomes back on track. I think in such circumstances, it would have perhaps made more sense to make structural changes to our tax system and ask for greater sacrifices from those who are more able to pay. Because though we talk about a low tax regime, when we compare Sri Lanka to our peer groups as an emerging upper middle income country, Sri Lanka's tax to GDP of in single digits is simply not going to take us very far. The peer group average for upper middle income is about 17% of GDP. And until we get to that point, even our expenditures on education, on health, on social security, etc., will never be able to be adequate to ensure that we address the other areas that, the private sector, for instance, keeps talking about: skills, technology, and all of it, that infrastructure, which tends to get pushed back because we don't have adequate resources to spend on these critical areas. So I'm going to stop at that. Thank you.
Thank you, Dr. Veerakorn. We've been asked to consider some very real and practical issues, underscoring that hope and optimism must be tempered by a willingness to critically evaluate the conditions in which we operate if we hope for growth. One of the areas, though, that has been earmarked for growth is the IT sector, and whether the budget proposals will support that drive and the means by which this will be managed will be addressed by none other than Mr. Dinesh Saparamadu, who is the founder chairman of Zenith Software International. Mr. Saparamadu, the stage is yours.
Yeah, thank you. And again, thank you for Professor Wattawala for inviting me. And my discussion today is going to, I think, previous speakers and others spoke very heavily on the budget and what are the implications. And I think the last speaker also mentioned that there's maybe no concrete solutions being provided in how we increase exports and increase foreign exchange. So in that light, I like to kind of talk about what we feel at the IT sector. And we think that the IT can be the real growth engine for Sri Lanka to be able to come out of this, both short term as well as on the long term. So budget actually talks about some of the long term activities that they are planning. I'll talk to them that at the maybe towards the end, but I kind of talk about three main areas. I want to talk about the current status. I want to talk about the solution, what we feel that IT can really bring about this need to be able to kind of increase the foreign exchange earnings to the country. And third, I will also talk about the demand that we see in the world, and especially in US, because the kind of work we are doing, and how the sector can be able to kind of focus onto that. So with that, the current status, I think currently, according to SLASCOM, we estimate the IT revenues to be about 1.65 to 1.7 billion, with a workforce about 115,000. And we means as SLASCOM actually has the goal of becoming a $5 billion industry by 2025 with a 200,000 employment. And if you look at from now till 2025, with all the private government institutions, universities put together, we only get about 11,000 IT professionals that are coming out. The requirement in the industry is almost 20,000. So we have almost about 8 to 9,000 deficit in IT resources that can be deployed to be able to do projects and also to do certain amount of services to be able to earn foreign exchange. So if you really look at, I think in the last, I think about 181,000 actually qualifies A-levels, but only 50% of them go into all the universities, private institutions, professional degrees, professional certifications, and all that. So there is a ready market that can be accessed to be able to train and be able to focus to get into the IT industry. So that's the kind of the solution that we feel from the industry and from SLASCOM and the industry, is that we can actually absorb between 9 to 10,000 IT professionals. And how do we going to do that? Because we feel also that because of what is happening with the A-level qualified, but still the large pool of people that can actually get into this industry, there are things that are called now nano degrees. Nano degrees are certifications that are offered by almost top tier Ivy League universities and others in the world to be able to do 3 to 4 months a certification course, and that you can actually become a professional in that particular area. So, places like Johns Hopkins universities and others offer these courses through a Coursera, which allows you to do a nano degree that can very easily, you can finish that in about 4 to 5 months, get into the industry and start working. You can become an apprentice, then you can actually go up in the ladder in that. So for that, the areas that are really in demand in the world market at this point are things like data science, AI, machine learning, digital marketing, graphics, content writing. So there's a slew of stuff that anybody who can actually come, they don't need to be a completely IT professional. They can be content writers, digital marketers, content development, web development. All of these actually have a huge potential in the world market. So one of the things that actually had done in the budget that is commendable is that helping these young freelancers to be able to do this work and being able to get those remittances. We are still working on certain areas of working with, whether it's PayPal or whether it's different payment mechanisms, how we can actually be able to get these not only freelancers but others to be able to kind of get that money to Sri Lanka. But I think those are just temporary things. There are many other ways that you can actually do that. So that framework, if we can actually work together and build this need of 10 to 11,000 expert nano degrees. So we can say, okay, Sri Lanka has 10,000. Sri Lanka has 10,000 data scientists, who have these degrees. Sri Lanka can have, 5,000 AI/ML experts, this will actually help to be able to attract multinationals and other developed, so from startups to other developed companies to look at Sri Lanka to make a destination to do their product development, their services in Sri Lanka. And a lot of these now does not have to go out. You can actually, the whole COVID, the best part of COVID was that, now you can work remotely. In our industry, for the last 2 years, we had only 5% that actually came into our offices. Most of them are working still from home. And during this pandemic period, the IT industry grew almost 15% to 18%. One of the things that I say is that now if we have to kind of bring everybody to office, we don't have space because we have grown about, we individually, our company grew almost 18% that we don't have office space. So we don't think that you need to get people to come to work. You can have a hybrid system and being able to still provide the service and the product development that we are doing in the IT sector. Now, world demand for IT, right? So I think some mentioned about Sri Lanka, but I'll talk a little bit about, the countries that we are doing some work. 2022 is expected to be a difficult year in the world. Inflation that was thought in US and others thought these were transitorial. It's not. It's going to be permanent, which means price of goods and services are going to go up. And we have seen this in some of the work that we do. We have a restaurant technology company based out of in Silicon Valley, 100% owned by us, that we provide online restaurant technology for SMB and the mid. And we have seen that most of our merchants are coming to us now to provide kiosk systems because they can't find enough workers, and the workers that they are finding, they have to actually pay almost 30 to 40% more than before the pandemic. So there is a huge wage increase, and that has also given rise for people going into areas of more automation and digitalization, which means more and more IT engineers and IT professionals are needed. Second thing is, with inflation being high and people looking for capital allocation, this is another concept that have been talked and discussed very heavily with capital allocators, whether it's hedge fund or LPs or GPs in US right now, is where do you allocate or where do you put your capital to work? They thought, previously it was thought that gold was a good hedge for inflation, but now the most of the people thinking the new asset class that is being coming up is cryptocurrencies, whether it's Bitcoin, Ethereum, now the latest is Solana. These kind of cryptocurrencies are becoming as asset classes. NFTs becoming as asset classes for people to deploy capital. So what it means is that people will be allocating some of their portfolios into these areas. But the most of the entrepreneurs and some of the venture capital things, these assets do not produce any economic value. They are called non-productive assets. So another thought is, allocate capital into productive assets that will create economic value, like developing and starting new innovative startups. So there's quite a lot of investment is going into startups at this point. And the reason for that is that they think that deploying capital into innovative startups and ride this wave of uncertainty and inflation. And by the time the economy rebounds, that you would have built organizations and companies that can actually take to the next growth of that. So, which means is that you are able to kind of, you're looking at where do you deploy capital, you're looking at deploying this capital into startup companies. If you think, recently I was reading the unicorns, the companies that are billion-dollar company valuations in US, almost there's about 3 to 4 companies daily are being valued at $1 billion. So if you really look at, I mean, we look at our economy here, and we talk about, maybe 85 billion as a total GDP, but some of these startup companies, their valuations are $100 billion. Their valuations are, the top companies are hitting almost a $1 trillion valuation. So if you look at it, if we as a nation can focus and bring our youth that are actually being coming out of universities and focus them into these nano degrees in a shorter period of time. While we are building the infrastructure, the universities, and creating these regional universities, and technoparks, we can actually be able to capture this current, the huge requirement that is needed in the IT sector. So some of the things that actually the budget has kind of brought together or put forward is, developing these technoparks, both in Habaran and Nuvarelia, Kandy by 2023, I think are good initiatives, working on bringing the whole BPM and the freelance workers together, and creating that ability to be able to kind of be able to do freelance work from Sri Lanka and be able to invoice and get that. That's another great initiative. So I think those are from a technology side. I see that, this budget has really kind of a broad certain areas, but I think as an industry for us, we talked about the revenues, the taxes that are being kind of put on companies, but I think we all need to pay our dues. I think we all need to, particularly I was very keen, even when the governor spoke, I think we have to pay, this is the time that we need to come out and being able to kind of help the government, because this what is happening here in Sri Lanka is not only happening in Sri Lanka. We work, our companies work more than 40 countries, and we see a very, very similar thing. But most of us in Sri Lanka think, okay, this is only for Sri Lanka, this is happening. It's not. So I think as an organization or as an industry, I think we have kind of committed ourselves, to kind of work with the government and being able to, put these proposals, not only to put the proposals, but also to work in executing these proposals. So I think overall that, but in my parting comments, I want to say something has been known for an HR company in Sri Lanka. I saw something very interesting that was actually brought up as a like to make a parting comment, is a proposal for productivity increase in areas with worth mentioning is introduction of an appraisal system and a KPI, which I think is very good for the public sector. They're thinking of implementing it, but I think even previous speakers mentioned, I think there are certain very, very good stuff in that. And for me, this both performance appraisals and KPIs are very key that we do with all the companies that we work with, and we have seen real ability to increase productivity of an organization and to create and make it efficient through these appraisals and KPIs. I hope and wish the government being able to put these things in place. And we have been from the HR community in Sri Lanka that have done a lot of work in Sri Lanka and also outside Sri Lanka. We are willing to come forward to be able to work with the government, even actually offering our services at this point, even completely free to be able to implement this, because I think if we get that into our public sector, get it into our officers and organizations, I feel that it can create a huge impact on what we are looking at. So those are my parting comments, and thank you for giving the opportunity to talk a little bit about the IT sector.
Mr. Saparamadu has set context for what's happening globally in the IT industry and the implications for us here in Lanka. Thank you. Your comments have sparked a question in the Q&A section as well. And we have been host to a lively debate from our audience in that section. So thank you too to the audience members for your contribution. The time has come now to gather our panelists and pick their brains for varied perspectives, as well as answers to some of the questions that you've shared. So our panelists now, in no particular order, Mr. N.R. Gajendran, who is a senior partner of Gajma and Company, Mr. Rizvi Zahid, director of Vidul Lanka PLC and former director of Haley's PLC, Mr. D.R.S. Hapuarachi, Deputy Commissioner General, Tax Policy, Legislation and International Affairs at the Department of Inland Revenue, Dr. Kulatunga Rajapaksa, Emeritus Managing Director of the DSI Group of Companies, Mr. Athala Ranavira, Managing Partner of Ranavira Associates and Chartered Accountants, Mr. Jehan Perimpanayagam, Chief Executive Officer of Informate Limited of John Keel's Group, Dr. Chandranath Amarasekara, Director of Economic Research for the Central Bank of Sri Lanka, Mr. Jonathan Allas, who is CEO of Hatton National Bank, and of course, they're all going to be led by our moderator, Mr. Duminda Hulangamua, who is Head of Tax and Partner of Ernst & Young, as well as being Deputy Vice Chairperson of the Ceylon Chamber of Commerce. So, Mr. Hulangamua, I will hand over the proceedings to you now. And esteemed panelists, we look forward to hearing from you. Thank you.
Good evening, ladies and gentlemen. It's quite a long session, so we just started panel discussion because we have a fair amount of panelists to ask questions. Some of these questions that I had for the speakers may have got answered already, but I'll come back to the speakers later. My first question is to Mr. N.R. Gajendran. Gajen, being a person in tax for a long time, this super gains tax has come to haunt us again. Put it that way. I mean, when it was introduced in 2016 by the previous government, it was quite new to all of us, and we thought that might see the end of the day. But then it has come again. So chances are that it can come again in the 5 years' time. The policymakers have found an easy way of, in my view, of collecting revenue. Having made the proposal, it is unlikely the government will go back. But what are your views? I mean, your views I can understand, but do you think there are any other alternatives to structure this sudden tax collection and 2.5 billion at 25% rate? Is there an alternative that we can suggest to government? And what are your candid views on this tax?
No, one of the two fundamental core principles that should be followed in fiscal policy or raising revenue. So one of them is the principle of equity, fairness in raising of the revenue. So you have to, in raising revenue, if you have a way of targeting the people who can afford and have the capacity to pay, generally that is on income tax and not on the regressive form of tax of consumption tax. From that point of view, strongly they have, this particular endeavor to raise, this time it's not super gain tax, this is a surcharge of 25%, and I wouldn't know, there is debate on the tax base and all. But it is the right direction. And if you see on the fiscal raising side, this time revenue tax raising about 335 billion, other than the social security levy, which has a cascading effect that also has to be dealt with, and also the special GST, which is also on basically on non-essential. Even the cigarette tax is also on the non-essential. I think this is the way forward. And the only thing misleading is whether they will stop this with this year. I don't think you'll have to wait for 5 more years. I have a strong feeling this has to be extended even the next year, because revenue is terribly short, because we have always for so many years, maybe I'm in this field for 35 years, I have always seen the revenue has been overestimated. And this time also has been overestimated, because the base on which you are basing that incremental is about 725 billion, the 2021 revenue of 1.5 trillion or close to 1.6 trillion. Whether it would be raised is another question, because the first 4 months, the revenue that was raised was about 425 billion rupees. But on your question of this thing, I think this is, they have got it spot on the revenue raising on the for tax purposes, fiscal purposes. Only 62 companies or 5 companies were targeted, but I think they may have looked at only the listed companies. There may be unlisted companies. And some of the listed companies that is going in the social media don't pay more than 2 billion. They don't have a profit of 2 billion. But I think
so what you're saying is that in as an alternative to having a uniform tax system, consistent tax system at reasonable rates, it is an alternative to
fairly, they have had the because one would have expected to some reversal of the tax policy. They have not reversed the tax policy. And I don't think they have raised adequate revenue, because when you don't raise revenue, you go into borrowings. And now that you're not going into foreign borrowings, into its local borrowings. If you see about 1.8 trillion on local borrowing, out of that 500 billion is on banking and non-banking. They're expecting a very optimistic 1.3 billion from non-banking sources. If you don't get from the non-banking sources, what will happen is you go to banking borrowings, or the central bank will buy up the bills and bonds that are being issued. And then even central bank lends to the government, it is again printing of money and inflation. So if you don't, the second principle is on the taxation revenue raising, it should be an efficient one. That means you must raise adequate revenue to meet your expenditure. If you don't meet adequate economy, you have to leave. I think this debt syndrome that Sri Lanka has got into, not only Sri Lanka, even the businesses that has got into, has to be revisited, and this has to be rebased because this way we cannot go forever, for a long time.
Thanks, Gaj. I just want to shift to a different topic. Rizvi, you're on call, right? Yes. Hi, Rizvi. Rizvi, hello, Rizvi. To you, I want to ask, there was so much of emphasis, there are references to agriculture, not only the budget in general, right? The manifestos to daily talk shows, etc. in agriculture. And now we have this organic fertilizer for agriculture. Do you think that the budget has given enough focus and emphasis? Because with the current fertilizer prices, there can be a food shortage. People are predicting, I don't know. You're an expert at that. What is your prediction for the agriculture sector in the next 6 months to 1 year?
Thank you, Duminder.
Yes,
very, very important aspect that you have touched on. Whether the budget specifically addresses the issues of food security as well as the impact for the agriculture sector, I can say yes and no. There is some positive aspect to it, and that is that the allocations from the budget proposals for some important areas, as you rightly said, the 35 billion allocated for production of organic fertilizers and pesticides is quite significant. It is almost close to the budget or the amount allocated for the fertilizer subsidy. So it's quite significant that 35 billion is allocated. On the downside is that there is no specificity in terms of what types of proposals can be implemented. So whether this is going to contribute towards adequate food, the food security aspect, income for farmers, and also impact on the national economy in terms of adequate food production is yet to be seen. We have to see some of the specific workout of how these revenue budget proposals are going to be allocated. The other significant amount, of course, is in the Wari Saubhagya allocation of 20 billion rupees on irrigation. And again, there isn't enough focus. For example, we would like to see a greater use of allocation for things like drip irrigation schemes, etc. Similarly, there's a lot of budget, the proposals for various types of other crops like cinnamon, pepper, coffee, vanilla, etc. Will be 10 billion rupees allocated. So we'd like to see some specificity in the work through, and also consultation with the various private sector agencies as well on how these proposals. But overall, I think the budget, again, going back to the positive aspects, is that the themes
are adequately covered overall in terms of the green economy, in terms of the organic fertilizer, the allocations, as well as the tech side. What is left to be seen is how some of these proposals, these financial allocations, are going to be specifically applied. And this is something that we will have to watch and see. But I think in a short answer, there is every chance that the food security, provided the allocations here are done in a very pragmatic way, what has been put down into the budget. Those are my initial thoughts, Duminder.
Thank you, Rishi. But Rishi, I saw some reference in the budget proposal about 35,000 rupees to be given to a farmer for income support. So we are going back to the subsidy scheme, right? In some form or the other.
Yes, yes. So this again is a bit of a stopgap, as Rushni said earlier. Those are some of the stopgap elements of the budget because they have to do some damage control. Because whatever said and done, whilst the organic fertilizer, organic pesticide move is a good one, the suddenness of it is something that causes a shock to the sector. So it's only now that it's being realized that there can be the lead time to develop organic pesticides and organic fertilizer is going to take time. So you need to give support to the farmers, and this is again the subsidy. So there is no choice unless you give the subsidy in and support. There's a great chance that there'll be a food shortage. So that's something to watch and see. Short term is that the current season there is some lagged availability of chemical fertilizer, and there's also some pushback on the policy. So there is some amount of chemical fertilizers, for example, that's coming in. So there could be some element of subsidy that is required, and I think that's very important. Otherwise, we'd be impairing the whole sector. So you're right, Duminder, there is the element of subsidy coming in, and it is of necessity. And without that, there could be negative implications for the entire agriculture sector.
Thanks, Rishi, for explaining as usual very precisely to the point. Thanks a lot. Mr. Hapawarachi, you're there, right? You've been there for some time. Mr. Hapawarachi, yes. Hello, how are you? Good evening.
Good evening.
Yeah, Mr. Hapawarachi, yeah, that's right. Camera, just keep it like that. Fine.
Yeah.
Right, now we have heard from a lot of industry experts, economists, specialists, everything, right? You were the missing man from the Commissioner General Inland Revenue, right? Department. Now, all these are, once the laws are passed, will be in your hands to correct. What are the improvements you are making to the collection mechanism of taxes, especially the super gains tax, or whatever name they're going to call it, the social, I forget the name of that, social responsibility tax or whatever, the new one. You know, do you all have the infrastructure, the human capital to collect and enforce these laws, and also of the current taxes, what you already have? What is your candid view?
Yeah. Okay. Thank you very much for inviting us for this important seminar by the CMA Sri Lanka. And here, as you just raised the question on our plans, future plans for implementation. But before that, you correctly remarked that the law must be ready. So the thing is that, just like I mentioned in some other places also, when the law is drafted, I think it shouldn't be done only by the policymakers. There are stakeholders from your side and also from the private sector and us in the tax administration. So I think with the views of all of us, I think we can do a better job. We can have a good policy coming into the legislation. So that is my first remarks about your question. But let me a little bit emphasize or explain the background of the country at the moment after the COVID-19 pandemic. Here we can understand one thing, that the SMEs are, of course, have been severely affected and down, except for some of the SMEs. And also there are certain industries, actually performing well. Maybe new industries, getting bettering with the pandemic. And also some of the large companies are performing well and on the rise. So with all these things, I think not only this, the policies we are having from the previous amendments to the Inland Revenue Act, as well as in the Finance Act, together with this, we are addressing some of the most important issues. And also about the tax gap. Tax gap is always due to two reasons. One is about the policy gap. The other one is, of course, coming from the administration gap. So if we can have these policies coming into the law and implement well with the plans, actually we can have plans after the law is drafted. And also if we can address to some extent to the gaps, I think we can perform well and country can go forward.
Thank you, Mr. Aparaj. We'll be all coming to you, I'm sure, for clarification once the law is up and running and also any submissions. So thank you very much for your contribution. My next question is to Mr. Kuruthunga Rajapaksa. Mr. Rajapaksa, you're there?
Yes.
Right. You know, as a stalwart of the local industry, contributing immensely to the development of domestic manufacturing, value addition, employment generation, all that, including backward integration with Sri Lankan suppliers, etc., in your business. Do you think this budget has given you enough support, emphasis, need not be in taxation, but in terms of emphasis and other allocations to enhance domestic manufacture and also to do backward integration so that most Sri Lankans are employed indirectly in the economic sector? So what is your view, Mr. Rajapaksa, that you can describe?
In the budget, there are two items that have been mentioned very clearly. That is restriction of imports of rubber products. It's a good move, but the question is, it is a very short-term thing because we must have a long-term arrangements as to the supply of natural rubber. Right yes. Now, the rubber production is about 5,000 to 6,000 tons per month, which is really enough to meet the present value addition part. So therefore, we are importing. So there should be a long-term plan in replanting rubber, because that takes about 6 years gestation period. That has not been properly addressed till. Therefore, if we want to increase the rubber industry or rubber end product industry, eventually the exports, it is extremely important that we have natural rubber plantation increased and natural rubber production increased. I don't see any plan in that, except for the fact that right now also latex and rubber are being imported. So that's not a good thing. If they want to develop the industry, the base industry must be developed, because right now this year we had too much of rain, therefore the rubber production has gone down very bad. That is number one. Number two is about the social security tax. As a domestic industry, where we sell our products through several layers, we manufacture, we give it to the distributor. From the distributor, it goes to the dealer, from the dealer to the consumer. There is no clear indication as to how the social security tax is implemented at each level. If you implement at each level, it will be a disaster. And also introduce a new tax is going to be difficult for any company. It would have been ideal if this can be, if the VAT rate have been increased, it will be a simple arrangement. But now they have introduced a completely new tax, which is virtually a turnover tax. So there is no mention whether that can be deducted from the income, not mentioned. Whether it be treated as economic service charge, also not very clear. So this is definitely be additional burden, because all the retail product manufacturers in the consumer are price marked. So this 2.5% is going to be definitely out of the profits, because of the price, it is price marked. And also, if it has been applied for each layers, the distributors sometimes they get margin about 4 to 5%. So if we count 2.5% out of that, I don't think they can exist. And also, it is not clear whether these apply to exports as well. If it is being applied to export, then it's going to be a disaster, because 2.5%, a huge margin for exports. So I don't think any exporter can afford to forego 2.5% by way of turnover tax in the export market. They cannot sustain. So these are areas that are not being cleared. So they have mentioned very clearly there are no exemptions, but I think it has to be revisited and see how it can be practically implemented to the industry so that eventually there should be an increase in exports and eventually there's a development of the local industries as well. If not, there will be a disaster. So that's the view of as an industrial point of view. Thank you very much.
Thank you very much. The rubber matter was also discussed with another manufacturer that is on top of this, if there is a cut down on the fertilizer usage, the production of rubber will come down further, and therefore that might put more pressure on the industries that are dependent on rubber in Sri Lanka. And imports also can't be stopped in that case. That's what the people are saying. So
yes, that's correct.
Yeah. Thank you very much, Mr. Rajapaksa, for your views. May I now turn to Dr. Chandranath from Central Bank. Chandranath, are you there? Hi, Chandranath. We meet again. We met on Saturday, so we meet again. Thank you very much for joining. Sorry to keep you waiting for so long, Chandranath. Chandranath, my question to you is nothing but one topic, which you are very familiar, which your governor covered, is, I mean, whatever people say, the policymakers, the ministers, the government, everyone says, okay, nothing to worry. Oh, there are issues they're facing, but we can still overcome this problem. The guarantee is given. I mean, all that. But in the end, there is $2 in the market. Importers unable to import. Industries have crashed. There's no gas in the market. You know, I mean, these are realities that all of us face. I'm not criticizing anyone for that, but I'm asking you, you're in charge of the Forex Situation Central Bank. Can you give an assurance to our audience and to the community in general that you are fully in control of the situation and that you will find a solution to the shortage on the basis that we don't go to IMF or anyone else for any alternate financing mechanism? That is a pressing problem, more than the fiscal issue in my moment.
Thank you very much, Zamir. Very pertinent question, and
sorry for putting you in a spot. Yeah.
No problem at all, because since the appointment of Governor Cabral, we've seen the announcement of the 6 months roadmap, and the focus of the roadmap is to provide a basis to resolve this situation, because I mean, even in the budget, it has been admitted that we are not in a very good situation right now. So if I try to explain to you the rationale for the 6-month roadmap, it is based on the debt servicing that we have as a country. So essentially, we made a very large the sovereign bond repayment last year, and in the fourth quarter of 2021, our debt service payments are quite low compared to what we were paying up to the beginning of the fourth quarter. And then again, at the beginning of the first quarter of 2022, we have a large repayment. And then we have some breathing space over the next few months before the next large repayment of $1 billion falls due in July 2022. So essentially, the idea of the 6-month roadmap is during this period, we stabilize the economy, particularly by enhancing the foreign exchange inflows and also building up reserves. And while stabilizing the economy, we'll be providing liquidity to the market to facilitate the essential imports. And if I explain to you the plan, I think Governor mentioned it at the beginning as well. All of us as stakeholders will have to contribute, and it was recognized by many speakers that all of us have to work together, because this is not a problem of just the government or the central bank. It's a problem of the economy, and we've seen how I mean, you were talking about the gas shortage, and the shortage of dollars, and students finding it difficult to find money to go abroad to study, and the health sector is affected. I mean, people cannot find money to go for operations in India and so on. So this is an issue. This is a major issue, and that's why all the painful reforms are also being introduced. Now we have a mandatory conversion of a part of the proceeds of merchandise and services exports, and the banks are supposed to sell to us a part of the conversions of worker remittances that they receive. And as the central bank, we are in discussions to raise funds through swaps with foreign central banks. So there will be central bank to central bank arrangements, and in parallel, we are expecting the government to expedite their government to government negotiations so that we build a sufficient pool of reserves to stabilize the exchange rate, and also to build up the reserves to a reasonable level by the end of this year. So when we get to about $3.5 to $4 billion of reserves by the end of the year, we will be able to comfortably pay the sovereign bond maturing in January, and again start rebuilding reserves towards repaying the next large payment of $1 billion by the middle of the year. At the same time, I think there should be recognition that we are also quite keen to see those monetizations of assets that the government owns, that also goes through, because that is also an important area of foreign exchange inflows that we are looking forward to receive. This is all in addition to the attempts of the government to raise the non-debt type of foreign exchange inflows, particularly through increased merchandise and services exports, as well as workers' remittances and other kinds of inflows which are of non-debt creating nature. Thank you.
Thank you, Anuradh. I think we all hope and pray that all these things will come true for the sake of all Sri Lankans. So thank you very much for that candid views that you expressed, Anuradh. My next question is, I have a long list of panelists, so I have one by one. My next question is to Jonathan Arles. Jonathan, you're there?
Hi, good evening.
Hi, Jonathan. Sorry to have you waiting for so long. Jonathan, quickly, my question. Yeah, I know. Sorry, Jonathan. From 9 o'clock, I'll be having seminars, right? Jonathan, my question to you is on the banking industry. How do you think the banks, in the context of the budget proposals announced, how do you think your bank and the banks in general can contribute towards mobilizing funds for the people? And the idea is that that people must have money in their hands to support agriculture, support industry, etc. How do you think you can perform that role?
So I think it's an important area, Duminder. This is what we, come to office to, which is to actually play a role aligned to the development of the country and the development of its people. There were a few nice presentations on the IT side by Dinesh, and then Rizvi alluded to the agriculture opportunities. Yes, specificity may be lacking at this moment, so thereby you're a bit concerned about the execution and the delayed cash flows. So execution is of the utmost importance. But say we get all these together, be it, let's say, the tech sector, which has huge potential, agriculture along with drip irrigation and other technologies, local manufacturing, some form of import substitution, entrepreneurship coming in, value-added productions rather than simple resource, resources being exported. In addition, transforming Sri Lankans from self-employment to entrepreneurship, that brings in a whole heap of value additions as well. Those give us great opportunities to play a role with the liquidity that we have, in addition to critical areas such as green financing that we are supposed to pursue, as well as looking at supporting the 2030 70% renewable energy endeavor through whether it's solar, whether it's various other renewable energy strategies. So lots of opportunities for us to play a key role in the SME grassroots levels. Gender parity, bringing in more females into business, as well as a critical part of the banks themselves, digitizing their businesses, having digital branches, and then getting, leaner, meaner, more cost efficient, and delivering a greater value proposition to its clients is what I see, Dhuminder.
I think, the bank industry has played and plays a significant role with the private and public, both in my view, in keeping the economy going. And do you think that this budget gives encouragement for that process?
I think it does in terms of the opportunities. It has permitted us to play a role, aligning with the government. If we can, get more details in terms of the SME type of businesses that we would venture into, there would be, I think, a pipeline of energy projects that would be made available. Local entrepreneurships, we are already talking with multiple, whether it's DFIs, potentially MLAs. How do we actually work together, collaborate, various agencies, how we actually work? It's quite aligned to some of the discussions that we are having around the budget, which we have actually been having over the last 2-3 months. We have already signed MOUs in this regard to develop certain regions, develop certain sectors, and in order to augment capacities within the economy, starting from the grassroots level, so that, it's not just about, it's corporates and all will continue to do their work, but it's about the rest of the economy and the SMEs and below as well doing it. So I think in that regard, there is enough opportunity for banks to play a critical and a crucial role in this budget and going forward as well.
Thank you very much, Jonathan, for that explanation. My next question is to Jehan. Jehan, you've been here for some time. On the IPO, rather the BPO industry, Dinesh spoke more on the software side, but on the BPO side, we can see increasing demand for Sri Lankan talent, with a lot of multinational companies who want to set up BPO operations in Sri Lanka, including my own firm. So, and this is at a high level, not just call centers, but more at a high level. The biggest challenge that I see that we face in the situation is that we have the supply to meet the demand. 7,000, 8,000, 10,000 people, if they take at double the salaries, then what do we do with the rest of the other companies that require people? There's a shortage there. How do you train our workforce to meet the requirement? Are we prepared to train? Are we? What do you think the government, as well as us as private sector, we should be doing to make sure that we have the workforce like the garment factory girls we had 20 years ago, 30 years ago? Whether we will have the workforce to support this industry like India does, because this is a real growing area for me in Sri Lanka. Yeah.
Thank you very much, Dhuminder. So as Dinesh said, this is an industry that continues to grow post the pandemic. And like you very correctly said, we've had several companies showing a lot of interest. We've been on multiple presentations because what the pandemic has taught us is that work can be done anywhere. And we are having now even competing destinations like India and Philippines beginning now to look at wanting to partner Sri Lanka because they are seeing the advantages in having a multi-country delivery strategy to mitigate risk. So like you said, there's a lot of interest in Sri Lanka. It's a very exciting time. And in that sense, the industry welcomes some of the budget proposals in terms of the tech parks, the fiber optic network for schools, and the international schools in every district, because this will be an important element in meeting the challenge that you very correctly identified in terms of the capacity. The Knowledge Hub that was announced, the new Finance Act, will hopefully address some of our other proposals that we shared as an industry to promote Sri Lanka as a regional hub to attract multinationals to set up the head offices in Sri Lanka. I think those could not be addressed directly in the budget, but we were encouraged to hear about the Knowledge Hub and the new Finance Act, which will hopefully address that. There was a lot of constructive engagement with all the policy holders from SLASCOM, so we were able to share our feedback and we were very well received. There are a few more suggestions that I think Dinesh touched on a very good point about some of these nano degrees, which will help our industry also. And I was particularly keen, particularly excited to see the rural development, because my company, for instance, we were the first to establish rural BPO, and that can be a very important element in fulfilling the need of this industry. And they have shown that they can reach world-class standards. We got a client recently from Australia, and that's partially being handled out of Sinigama. So the government's status, the intention to invest in better electricity and telecom infrastructure in the villages is a great step forward. And we were also very happy to see the repeated references to ongoing green projects. SLASCOM has recently launched an ESG initiative, and we want to position Sri Lanka's IT BPM industry as the first green IT destination in the world, known for responsible business practices, known for diversity and for inclusive growth. So there were several very encouraging facets. As an industry, we need to also work with both state and non-state universities. We are, as you know, SLASCOM has a capacity forum which is working very proactively, giving syllabus, giving feedback, inputs, even our resource people to be able to better deliver content to make sure we have the numbers.
Yeah. So also I was told that there is also a plan to not to concentrate all these things in Colombo and Western Province, to reach out to places like Kandy, Kurunagala, so that you are able to recruit people at a lesser level. You can recruit people rather than try to recruit at a high level. So and in order to meet the regionalization policy.
Exactly.
Thank you. Yeah. Because this is going to be a real challenge. I mean, whilst we promote the industry, getting the manpower is going to be the challenge, I can see.
Okay.
Thank you, Jahan, for that. I turn to my colleague Atula. Atula, are you there? Atula?
Yeah, I'm there.
Atula, right. Atula, I have a question to you. Sorry, I kept you waiting so long, Atula.
No, that's okay. No problem.
Yeah. The question to you is what Mr. Kurutuk Rajapaksa raised on this 2.5% turnover tax, or I forget the social, whatever levy or collection that you would call. We'll become familiar with these words as we go along in practice. Do you think that it will be introduced, in your view, as just straight on turnover, or will there be exemptions, exceptions, input taxes that will be given to different industries with low margins, or they should do that for exporters? Because everyone says, okay, everyone must pay some tax, right? So are you saying there should be exemptions given? In this, if we go back to, I hear what Mr. Rajapaksa is saying, but what do you think how the law should be framed? Is it just one law across to everyone, or should we recognize the individualities in each industry in imposing this tax?
Yes, as Gaje also mentioned, there has to be a rationality of this tax payment ability. Now, when we consider the payment ability, one aspect is payment ability. Therefore, definitely we have to think about the profit margin of different businesses. Like distribution business, the profit margin is very less. In petroleum, petrol sheds and all, the cigarette agencies, profit margin is less. Therefore, definitely, like in ESC, what has happened, they considered 1/10 of the turnover as the turnover. Then likewise, they may have to introduce different tax effect to different, depending on different profit margin. That is one aspect. The second thing, when we think about the export business, Now already the freight charges has gone at least 5 times, it has gone up. Now with that situation, our products are not much competitive enough in the international market. In a situation like that, if we'll charge more tax on exports, what will happen? Our products may not be competitive enough in the international market. Therefore, especially in the export sector, we have to think about that. And local sector, definitely we have to think about the profitability of those each businesses and introduce different tax rate. The other thing, now this tax rate, whether it is 2.5% or 3%, there's a small ambiguity there. In one place it says 2.5%, another place it says
it's 2.5%. I was told it's 2.5%. Yeah.
Right.
Yeah.
Then, yeah, the other problem, whether no sooner you go beyond 120 million annual turnover, are we going to introduce some marginal relief or not? I think when they are legislating this, they may have to introduce some marginal relief. Otherwise, it is not fair. Now, yeah, those are the things which relate to social security contribution.
Right. Thank you, Atul. Thank you very much. If I had time, I'll come back to you. Mrs. Zabandar, are you on the call for the ministry?
Yes.
Yeah.
Yes. Mrs. Zabandar, I have a question for you. It's come from the audience as well as I also had this question for you. The rationale for introducing the special GST, I thought is done away with. That after last year's budget, it was not introduced and will not be introduced. Can you give the rationale for this GST? Because what I hear, same institutions will hold this tax. Same institutions will administer it. You only change the collection agency from respective institutions like the Excise Commission and the Department of Revenue to the Ministry of Finance. Is that the correct thing to do? I know you're a government service, you can't go against policy, but what is your rationale? What is your view on this whole thing?
Actually, Mr. Hulangamo, that was because we wanted to compensate the taxes on liquor, tobacco, and betting and gaming and telecom industry, especially, and the motor vehicles. That is why we introduced that tax. So actually, some policy matters I can't explain now. So that is already drafted. That act is already drafted. So it will be implemented with effect from January 1st, 2022. We hopefully that.
So do you think there will be additional revenue the government will collect from that as opposed to current revenue from these sources, from these industries?
Additional revenue on that amount, that tax, under that tax?
What is, yes, as opposed to what is already collected under the excise ordinance and
yes,
under the
there may be
VAT
slight tax change. There may be slightly change, but it is actually a conversion from the excise duty to SGST. Therefore, it will be a same tax, but a slight difference will be there.
Right. Okay. Thank you. I know you can't sort of discuss policy. I understand, so I won't put you in difficult situation. So thank you very much, Mrs. Zabandar, for that answer. I have just 10 minutes or 5 minutes more for my panel discussion. I want to go back to Dushni if she's online. Dushni, are you still there?
I think she's gone. I think
she's gone. Okay. Hasith is also gone, is it?
Yeah, Hasith also gone.
Okay. Yeah, actually, that question was going to be on the fiscal targets that they have given with achieved, but not Dushni has answered part of it. So I think so that part is okay. Then on the foreign exchange conversion, I had a question. So that's also all done. So, Professor, I think with that, I have covered the entire panel on the questions. So I'll hand it over to you to conclude because it's 8:50. That was time given to me.
Thank you very much, Duminda. I think we appreciate very much the panel discussion, which covered most of the important areas, and I must thank also our panelists because I know that they have really devoted much of their time, but their comments were really representing the sector and also gave a lot of value. I think value for money is something that we are really looking for. I wish to appreciate all their good work, and may I now hand over to our Pompea so that she can continue with the program.
Thank you so much, Professor. Now, we've had valuable contributions from so many this evening that, of course, thanks are in order. And to ensure that the gratitude is delivered to the correct people, we'll be calling upon a gentleman who holds the dual role of Vice President of both SAFA and CMA Sri Lanka. But before we go into that, we'd like to request that the panelists switch on their cameras for just a moment so that we can mark this occasion with a virtual photograph. So if you could, we'd really appreciate that. Thank you so much. We have one panelist left, Mr. Saparamadu. If you could also become visible, thank you. All right, your best faces forward, please. Okay, and that has done it. So thank you so much for that. We are now going to hear from Mr. Hennayaka Bandara in his capacity of Vice President of CMA Sri Lanka as he makes the closing remarks, and thanks all those who need to be thanked. Mr. Bandara, over to you. Thank you.
Thank you, Dinasha. Ladies and gentlemen, during the past 3 days, all of you would have heard through various channels the implication of budget proposals on business enterprises, economy, society, and the importance of public finance management. Nevertheless, Honourable Governor of the Central Bank, as usual, explained it in a simple manner how the government is planning to meet the economic challenges that the country is currently facing by emphasizing the necessity to have sound and strong macro fundamentals. With that note, on behalf of CMA, let me extend a big thank to Honourable Governor of the Central Bank for his participation as the chief guest and keynote speaker and articulating the benefit that the society will get over a period of time with the implementation of budget proposals. Let me also thank all distinguished speakers who have found time to be with us. Ms. Priyanka Disabandara, Dr. Mrs. Dusni Veerakorn, Mr. Nista Sulaiman, Mr. Hasita Premaratne, and Mr. Dinesh Saparamadu for explaining policy framework, tax proposals, implication on business and society, economic implication of budget proposals, and importance of IT industry. More importantly, technical and professional analysis provided by them on budget proposals would have been beneficial to all of you to clear and doubt any confusion. I also would like to thank Mr. Duminda Ulangamua, the moderator, for the wonderful job done, and all eminent speakers, Mr. N.R. Gajendran, Mr. Rizvi Sai, Dr. Kulatunga Rajapaksa, Mr. Ranjit Hapuarachi, Mr. Atul Ranavira, Dr. Chandanath Avarasekara, Mr. Jehan Perivanagam, and Mr. Jonathan Allis for the expertise and input provided to make all participants are aware of the subject matter and providing clarification to the extent possible within the time allocated to them. Let me also thank our President, Dr. Lakshmana Vatawala, for the guidance provided in organizing this webinar, and CMA team for all the arrangements made to have a successful event. Great to have all of you, ladies and gentlemen. Hope to see you again. Take care, stay safe. Thank you all. Good night, all of you.
Right.
Night. Thank you very much. Thanks everyone for their participation.
Thanks.
Thank you all.
Bye.
Thanks, everybody.
Good night.
Good night.